Yo, good morning, good afternoon, good evening, good day. Hope everybody's doing well. Blessed Sunday. It's been a while. Hope everybody's charting, trading, investing has been going well for you guys. Um, Hope the market's been treating y'all well. Your setups. Uh, haven't really been trading as much this past 2 weeks. I was trading futures. Got into some good trades and then took a few losses that were a pain in the butt. Figured I reassemble my trading strategies, my setups, my rules. So I figured I'd take a break so I can get myself mentally prepared for what's to come for myself. So that should be good. Interesting to see. Um, some changes in my community, my Discord community. We got going on. Me and another buddy of mine plan on collabing and doing some things. Right now, we're in the works of trying to mesh both of our servers together to bring an ultimate overview of education, trading, live trading, and investing knowledge, so that we can grow as one. Because being in each other's servers, excuse me, gets kind of repetitive when we can just pretty much put everything all in one. Um, oh my bad. But yeah, just trying to do something different, but help each other at the same time. So, uh, hopefully, in due time, it works. Um, we're trying to get a bigger size community going, a better base of like-minded individuals and people that really want to just get down to the nitty-gritty of just trying to change overall. I mean, our own individual servers are trying to be like that right now, but it is, like I mentioned, repetitive, trying to constantly just go back and forth with each other's servers and trying to, you know, network, trade, help others like learn about, trading and stuff like that. But it's still a work in the progress. Excuse me. So, but in due time, we'll be trying to promote that and get more people involved. Uh, just because we want to teach, we like to trade, we like to teach, and we like to travel and help ourselves and everyone else around us grow accustomed of wanting to do the same for themselves, have more family time, and constantly grow. So that would be a blessing if we can get that going. Um, but for me individually, I personally want to just trade futures more often. I like futures. I like what it has to bring to the table. I do particularly like options as well. I mean, that's what I learned about trading when I first got into trading 3 years ago. I think it's a blessing to have that in your arsenal. But I feel like I'm going to switch up my option trading once I get my funded accounts situated and etc. I personally want to take profits that I get in my personal futures accounts, and then just buy shares. Excuse me, buy shares of stock, and then just trade against those shares and just make a passive income of doing um, trading against my shares, covered calls, um, selling contracts and stuff like that. So in due time, we'll get that going, and you kind of want to implement that in our channel, our community, so that people can find other avenues and opportunities to make money in the market instead of just buying calls and puts. They can use some of that capital that they have to buy shares and trade against those stocks and trade against those contracts and stuff like that. So that'll be a blessing to have. Um, but as a little disclaimer, man, not a financial advisor. This is just for entertainment purposes only. If you are looking for more of a financial understanding about everything, find yourself a financial advisor. They are everywhere. And make sure you reach out to them. They will more than gladly help you with those needs of bettering yourself that way and taking their insight better. I'm just a regular cat trying to show what I see and see if it works. If it works, blessings. If it doesn't work, it is what it is. Keep on pushing, learn from your mistakes, and learn to do better. So, with that being said, let's start this little woo wop and see what the charts were from last week. Starting off with Tesla. We have a love-hate relationship with Tesla. Overall, I love Tesla long term. I like the car. I like the company. But as a investor, you want to be able to buy at a low price. And it would be phenomenal to see Tesla back at the $100 range. But that's a lot of money being lost for Elon if it does go down to that point. But I mean, we already know it's going to get bought up if it does go to that point. So, excuse me, got to keep an eye out for that. One moment, if y'all don't mind. My bad, chat. I'm trying to something real quick. That's the cheapest I've ever seen. That's breakfast. Oh, okay, perfect. 1 second, y'all. Where that one charge to? But all right. All right, 1 second, y'all. Well, that took longer than expected. Sheesh. Appreciate y'all waiting for me. Breakfast took way longer than it should have, but all right. So, with Tesla, a lot of lines. Uh, Let's clear this up. So, on our daily. So we have a low. How do I use this again? I use this thing so long. So we have a low. We'll adjust that once we get to that point. Activate drawing. Let's just go to the body. How do I go to the body? The wiki itself. Boom. Okay. Let's put that as. Alright. We'll do a green support level. That's our body of that one. Okay. So we have that low. So we know that area is there. Now, I was mentioning before I went to go grab my food was that it would be nice for us to actually see Tesla hit down to that previous low of $103. Now, mentioning beforehand, it would be tough for that to happen because Elon would be losing a lot of money, and that happens if it goes down to that point. But for us, investors, buyers that want to buy low, sell high, you would love for it to see it get back down to that $100 level. Now, from where we had charted actually last month, we had charted Tesla at points of where it is like here at this 177-ish level. We had said that it would be nice to see it come below that, but it would definitely bounce and fight its way. So when we were talking about it, it was around this area here last month. And surely enough, it came down low, but it definitely bounced up and stood full ground off of news of, Tesla hitting certain numbers and certain things that were going on, I think, overseas. And it popped up, and then as we see, the market pretty much brought it down, which was nice. As I mentioned before, I like Tesla, I like the car, I like the company. Overall, I think I'm a I'm a bull for Tesla. But short term, I would love to see it come down for better prices for us to be able to buy. With price cuts and et cetera that Tesla's trying to implement, it would be nice for us to be able to see Tesla come back down. And then once we get there, another earnings report, we can probably see a pop again. Because if we have a price cut on their vehicles, that means it's more affordable for us to be able to buy a Tesla. And that means more vehicles on the road, et cetera, et cetera. So short term, I definitely think that we see more downside, but not a whole lot. Just depending on what's going on in the market overall. But we do know that Tesla doesn't really follow the trend of the market as much as a lot of other companies do. So let's go to our 4 hour. And see. Too much. Let's see. Now, what do we see what we can look at for this one if we choose? All right. So it's bouncing. It bounced slightly off this level. Now we could see an upside again on it, depending on. Oh yeah, it looks like another leg up. It wants to pop for us. So just between this day alone, it looks like it wants to have another leg up. Damn, this was one of those days. 157 to 160. About a $7 move, $8 move on Tesla on Friday. That's nice. Yeah, it was an interesting day. Let's see what this. Yeah, pretty much it did. So what we can look for, let's go back to our 4 hour, and then we can delete that. Let's adjust this. So pretty much, I see that there could be another leg up if it breaks out above this level. I want to say if it breaks above this level. again. Let's see. Let's go. Let's just break out. Let's go with that. Let's put you at a golden line. If that breaks out, that'd be nice. Let's do that on the right. No left extension, and we'll keep it there. So going into tomorrow for Tesla, this level here is definitely to keep an eye out for, because either it breaks out from that level, because you can see previous days from last week or the week before last, or yeah, week before last, we saw Tesla just dump. For those that were shorting it, that was a nice play. I mean, if you had a like 2 weeks out puts, you pretty much banked on that big time. So it can either break out, and we can see an uptrend. Um, the Lord knows where, to be honest, just because of this huge fall that they had. And it looks like the next like resistance level will be up here. Let's see. Could be wrong. Let's see. Somewhat. Let's see if we can bring it down just a little bit. Bring you down just a little bit, and then we'll activate it for a straight line. And we'll put this as like red. So, in my eyes, I mean, we could see it go back up to damn near 180 again. Would I would want to see that? Not really. I'd rather see it just come back. I'd rather see this reject this zone and then have it come back down. But it looks like it wants to give us another leg up. So that's the only thing I'm curious that we see. We could see a breakout for sure. Excuse me. We could definitely see a breakout for sure. But just keep an eye out on that for Tesla. If we do see some downside, let's see. Honestly, it's free fall. To be honest, there's not much that we see as huge support. We did see that briefly, and then we could possibly see this till we get down there. But you know, it's a possibility we see some lows, but at the same time we could see a breakout and retest at least that 179, 180 area. Meta looked great. I clicked on Meta earlier, was looking at it. Meta had a freaking field day. Was this? I don't. Oh, this was earnings. Meta had a field day on earnings. Jeez. Meta pretty much changed people's bank account lives. Meta pretty much made some people quit their job. Huh. Sir, I quit. So honestly, I don't know what's gonna really stop Meta from going higher. Meta had some crazy. What is this like? What type of move is this? This is like damn near $30 move. 30+ dollar move overall in 2 days. Yeah, that's insane. That's insane. From there to there, and then opened up again up there. Like, yeah, that's insane. I really don't have much to say about that. That's I mean, we can look for a pullback, and then for a reentry for another retest of the high overall high. But what is that on the daily? I know that's not even close. But there's a huge that is a little worrisome. That is something that you got to keep an eye out for. That is a huge gap, but we don't know what could bring this down for us to fill back in to give us another retry back at 200. But that looks like it could come back down on the daily. But that thing, that's the play right there, chat. AMD, I think there's an ascending wedge that's going. Oh yeah, ascending wedge for sure to break out. Like that. Those interested on AMD, this could be your chance to go long on it because we already had damn. I still remember when AMD was a little bit cheaper than this, just a little bit cheaper. I think we saw AMD like that. Damn, I remember that. I remember those days. Wasn't too far away. That was a couple years ago. Oh, this is 2022. Oh, this is 2022. My bad. I thought this was 2021. 2022. We saw 55 for AMD. I was getting kind of worrisome, to be honest with you. I didn't put money into it, sadly to say. I think I was more trying to trade. What's going on, Zerk? I think I was trying to trade. Um, I want to say I was trying to trade Nvidia at that time. But AMD at that price is interesting for sure to see that AMD got that low, even with around here in the 2020s. I still remember this. And then, surely enough, was this 2019? 2020, 2021? No, that is 2020. This is 2020, 2021, 2022. This is 2022. Yeah, okay. So I do remember, or was it around this price? When did I start trading in 2020? No, I wasn't trading around this time. But this is crazy just to see that. Oops, that we saw numbers like that. Um, damn, $48. I think that was like you sold your AMD. I know you kind of regret it right now, don't you? FRC. What is that FRC at right now? Didn't it go? Sheesh. That's cheap from $222. Damn, that bank took a hit. Lord have mercy. Just getting into banks at a cheap price. Damn, at $7, that would have been nice. That would have been huge. That previous low at 20 a couple months ago. Was this last month? No, that was in March. Yeah, that would have been nice. Hope you didn't get it at a high. That would have. It's like, oh, that would hurt. That would definitely hurt. I would have been crying for you, brother. Oh damn. I'm sorry. You might not want to check. You bought your AMD at 127. Yeah. You know you could always average down, right? Get that average from 127 down to like 100 flat, maybe even cheaper than that, depending on how much you buy. Let's see. Apple's been looking strong. Apple's been looking way too strong. Is this, where is that? Damn, it's reaching almost all-time high levels again. Fine. 182. Uh, what did you sell your AMD at? Right. I know that's the all-time high at that junction of a number. There is several resistance levels. It broke out before. Interesting. Daily. You don't know about averaging down? Okay, so for instance, say you bought a stock at $10. You're okay, cool. I got you. I'll teach you something real quick. So imagine you bought a stock for $10. Stock goes down $8. You're taking a $2 loss if you decide to sell. Now, if you choose to average down to cut your average cost of what you bought it at, you buy it at $8. Now, let's say you bought the stock at $10, but you bought 100 shares. At that 100 shares that you have, you bought another 50 at $8. Your average of that $10 stock now goes down to around $9 and some change. So every time you buy, when it goes down lower, your average of initially you buying it at comes down instead of it being at $10 where you initially paid at. So every time it goes up, you're cutting close to your break even. So instead of it being at $10, it's now at 9 something because you bought it around $8. And so that means that one, you have more shares of the stock. Two, you have it at a cheaper price because you average down. And then by the time it gets back to the initial price of what you originally bought it at, you're in profit. So say you bought it at $10, it goes down to $8, you're at a $2 loss. By the time it goes back up to $10 again, and you did an average down, now you're at break even. But when you average down and you get it at, $8, and it gets to $9 and some change, or even closer to almost $8 range, like $8.50, $8.75, depending on what how many you buy. When it gets back to $10, now you're in a huge profit because you got it at a cheaper price, and now you can sell initially how much you originally bought. Like say you bought 100 shares, and now you have, let's say you have like 400 shares because you bought 300 shares through that whole process. Let's just say now you can sell the 100 shares or 300 shares to get profit, and then still have however much you want by the time it goes to $10 up past that, and now it's more profit onto that. What you also could do is, well, I pretty much try to teach people how to trade, is you can trade shares, or you can trade the stock itself, or trade shares, excuse me, or you can trade options, which is more of a strategic kind of way of a concept of trading. It allows you to trade stock at a cheaper price via a contract of you willing to buy or sell a particular stock at a particular price. But it's not really you buying or selling buying the stock. I'll give you a quick example if you don't mind. Let me open up Robinhood, even though Robinhood is ass, but it's easier for me to. Excuse me. I don't have any money on my Robinhood account, so don't worry about that. So for instance, let's say you have FRC. I don't think FRC. Can you trade stock options on FRC? You could. Okay. So as you see, I need a. Is this only chart settings? Okay, I need a whatever. So you go to options. Yeah, of course. So, but when you say I don't know how many shares you own of FRC, but when you trade against your stock, like your shares, they're called covered calls. So now, if you think a stock is going up, let's just say you think FRC is going to go back up to maybe like, let's say like $4. For the stock price that it's at right now, it's at 231. You have 100 shares of the stock, and you say, okay, I think FRC might come back up just a little bit. Now I want to give myself 2 weeks time. I'm going to collect a premium for willing to sell my 100 shares at a particular price. Now, if I think it's going to go to $3 in 2 weeks, I can go ahead and get this contract and wait 2 weeks for FRC to go to $3. I automatically get this $1.30, which when trading options, you're timesing that by 100 because it's 100 shares that make that one 100 or that $1. So I'm getting $130 right off the rip. I can do whatever I want to do with that, but I have to wait. Well, technically, I don't have to wait. You don't have to wait at all. You get that money right off the bat, but you make profit even more by willing to sell that 100 shares at when it hits $3. So you're willing to give up those 100 shares, and the profit that comes into from technically 70 cents for it to hit $3, and then I get the extra $130 onto that. Now imagine if you have 1,000 shares of this stock, and you can do covered calls and make, you know, $1,000 off of willing to do covered calls for it to hit in that time. Like, that's money. You're making money back on the money that you lost, let's say, because I don't know how much you bought it at, but if you bought FRC at a high price, then, you've taken a big hit. But if you average down and buy more at this cheaper price, and then, wait for it to hit $3 again within 19 days, you can make money onto that. So even if you have stocks or shares of particular stocks, it allows you to make a little extra money onto that if you choose to do so. If you choose to do it this way, instead of like buying a stock and, hoping and praying for it to go up. And then when it goes down, you're like, damn, I lost, X amount of money. Now I got to average down to kind of get the in between. But now I own more shares of the company. And then by the time I want to do my covered calls will allow me to, be able to make an extra something out of it. Now, what you can do if you don't have 100 shares of a particular company, but you have somebody to play with, there's things called a poor man's covered call, which allows you to sell a call and buy a call. So you give yourself some time. So, for instance, you think, let's give yourself, so that's about 4 months. You buy a call. So let's say you buy in the money, so $1, and you sell a call. It's 3-1. Now you pay $160, but you make money if the price of the stock goes up. You make initially, your max loss is $110, but your profit is still almost $100. It's a more strategic way of doing it. Let's say if you don't have the shares to do it, but you have money to play with, you can do covered calls. So you buy a call. You think the price of the stock is going to go up, so you buy a call a long way out, so a couple months out, but in the money. So we bought it at the dollar range. So when we go back to August, we see that we're in the money, which means in the money is that the stock price of it is already hit. So it's been past the dollar. So we had to pay initially $290 to buy this contract if we thought the price of the stock is going to go up, which is a safe way to do it, but you're only willing to risk, a small amount of money for it to keep on going up. And what you do is it gives you some security and cushion. So if it comes down to almost $1, then you're like, damn, you gotta cut short. So it tells you here in this little chart that if it gets past that $1.94, then that's when you're taking a loss on the trade, but you're only losing a little bit of money. So this is your cushion right here, and then you go to sell that contract, that quote unquote 100 shares, and you give yourself that time frame. Like I mentioned, if you had those 100 shares instead of this contract, then you're willing to sell at $3. Now you're making $130 off of that contract. So now instead of beforehand, you're only paying $160. And then it allows you to have some time to make money on the short end. So even if it goes up to $3, it goes up to $3, you make your money. Anything after that, it's taking off a little bit of money off of that. But you could close out that contract when it hits that particular price point. And now you made your exact profit of $98.31. But if you didn't choose to do so, if you didn't choose to do it that way, So, yep, $3, $130 right there, boom. If you had the 100 shares. So there's different ways to really make money off of what you have. So if you have a lot of shares, you can trade against those 100 shares to make a passive income on a weekly to monthly basis if you choose to do it that way. Now, if you are barely just getting into it and learning how, like, the concept of like getting involved of, okay, so what I just showed right now, you can just blow that off. That's just a different way of like, if you didn't have 100 shares to trade against, then you would do via option version. If you have the 100 shares and you want to make a passive income on this, on your 100 shares, then you can trade against those 100 shares. This is what the bigger money does. They buy a lot of shares. So like these bigger investors and traders, they buy a lot of shares. So they spend hundreds of millions of dollars, billions of dollars on stock. And then they trade against that to make a passive income on a weekly or monthly basis by trading against it. So like I mentioned before, if you have 100 shares, this is what options comes into play of trading against it. Because like you mentioned, you understand when you buy puts or calls, you feel like the price is going up or down. You believe the price is going up or down depending on if you're trading calls. But if you're trading puts, you feel like the price is going down. That's when you buy. You're buying on that. But you can sell and make money as a distributor. As okay, like if you have shoes to sell, all right, well I bought these pair of Jordan 1s for let's say $120. But I know that the market's gonna go up. So I think by a month's time, I think this particular shoe is gonna go up to $200 just because of the value of it. Now I'm willing to sell my particular shoe at this particular date if it hits this particular price point. So that's why these contracts come into play of I'm willing to sell FRC at $3 because I bought this particular stock at a cheaper price and I have, 100 shares of it. By the time it hits May 19th and this stock hits $3, I'm getting profit from me buying it at, let's say you bought it at $1. So from $1 to $3, that's $2 of profit. I'm already making $200 on 100 shares, plus the extra $130 for the contract that I was willing to sell that contract to the buyer. So the person on the other end's going to buy this contract for $170 when you're only making $130 off the contract because you're willing to sell at that $130 for that contract premium. So if you have 100 shares of a stock and you're willing to, make an extra amount of money for it, then you can sell those 100 shares at a particular price point and gain a premium off of it. The higher you go, the lesser the premium is. The lower to the money, the initial share price of it is, the more you get, just because it can hit quicker. And then that's when you're just trying to get rid of those 100 shares. Now, let's say if it doesn't hit $3 within that 2-week time, you still gain the premium of what you were trying to sell that contract at, but you still keep your 100 shares, which is still nice because if you still believe in the stock overall, but you really don't want to sell the 100 shares, but you're not really too worried about it, and it doesn't hit within that 2-week time, you still get money regardless. You still get the $130, and you still keep your 100 shares. That's a good part about trading against your stock. Let's hope that makes sense. Sorry, I'm trying to take a bite out of my food. Going back to Apple real quick. Apple honestly wants to. I feel like Apple wants to retest 182. Um, but this pattern here, we see this ascending wedge. Those that are not too custom of patterns, this is a ascending wedge. So as you can see, it's hit highs, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. This one didn't hit the higher high. It just stayed at this level, and it finally broke out. What's going on, Raymond? Okay, I see. Long-term contracts can equal passive income if it yeah, exactly. It's honestly, if you think about it, it doesn't even you don't even have to hold it for that long. So like even if you do the contract purpose of trading against your shares, you don't even have to hold it. You can make that money on a weekly basis. So for instance, we did 2 weeks out just because it was kind of like, it gives you a little bit more time. But if you choose to do it, let's say on Cinco de Mayo, if you're willing to, you could still sell a contract for $120. That's a short amount of time. If you're willing to risk 100 shares at that price, that's still $120 you're making right off the rip. And then you just gotta, if you're willing to let go of those 100 shares of FRC at that price, boom, $3. It's still a profit. Let's say if you got into the trade tomorrow. I said, "What's up, Ray? How you doing, bro?" If you choose to get in tomorrow when the market opens, and you're willing to sell at $3 if you have 100 shares. You're willing to get that's $120 right off the rip for that contract. Right when you get into it, like right when the market opens, well, maybe the premium might change right at the market opens, but giving you an understanding of if the market was open right now, that's how much you're gonna get. $120 right off the rip, and then you're willing to sell the get 70 cents off of profit for 100 shares, which is like what, $7 or $70, sorry. And then you get an extra $120 onto that. That's almost $200 right there. Ray, you said not much, man. Nice Sunday out making some rice and gravy. Ooh, that sounds yummy. How's everything? Not too bad, man. Just chilling, charting up some stuff for the week. Uh, Not too bad, man. The week was pretty nice. Work week went by quick, and the weekend is going by faster. So right now we're just chilling. But Zerk, yeah, like that literally. If you think about it that way, it's like it's an easy kind of flip if you think about it. If that's if the stock price goes up, you're still, regardless if it goes up or down, you're still getting that $120, but you make profit on a week to week basis. You can make it week to week basis. Now, again, if you choose to go a longer time out, it's different. So, like, say if you want to go to January 19th, 2024, so next year, you're not really making too much. Yeah, you're waiting for it to go $4, but the premium here is not even showing, just because it's been the stock is taking a big hit. Yeah, it's crazy. It's already May. I know. I know. That's. I was just talking to my buddy about that, man. And we're almost halfway of the year. So yeah, Zerk, there's different ways you can do it. You can do it long term, you can do it short term. Long, excuse me, long term, you make a lot more on the premium. For instance, not this stock though. So let's say we did Apple. Apple's a big company. I mean, you'd be spending a lot more money, but let's do something that we can afford. So more affordable. Um, what stock? What's more on affordable list? I like plug. Oh, let's just why not? Whatever. Let's plug power. Now, stock price is what, $9? Yeah, $9. Now, if you go a year out, you buy 100 shares, $900 right there. If you're willing to sell, if it gets to $12.50, you're getting $1.28. Short, wait, my bad. You're getting $1.20. Now, short term, it's, you're only making $8 on each go about. If it's 10 bucks, which is not even good. So it's like, kind of sucks. That's kind of a bad one, but that's the cheaper price. But if you go to Apple, for instance, Apple, it's a lot of money to put towards 100 shares. But just to give you an understanding, if you're willing to sell week to week at 100 shares, Apple goes to 172. You get, depending on how much. Let's say you bought Apple at 160, and you're willing to sell it at 172, 172.50. You're gonna get 100. No, that's a $12.50 profit per each share that you own. If you're willing to sell it at 172, plus the extra $200 you're getting for the contract. Now, if you went out a year's time, look how much money you make. If you're willing to sell, if you bought this, let's just figuratively speaking, you bought Apple when it was around 120. That's when you put all your money into trading and investing. You bought 100 shares at 120, and you're willing to sell Apple at 175, but you're giving yourself almost a year, less than a year time for that to do that. That's huge profit. That's what, 50 plus dollars in profit, $55 on each stock that you have, plus $1,500 on the contract that you initially agreed to sell at. So like, there's so much like you can do. You can start buying into stocks, averaging down on stocks. Every time there's a red day in the market, you buy, you buy, you buy, you buy, you buy, you buy. And then to your average cost of that particular stock is at a good price range, and then it rockets, shoots up. We're seeing crazy numbers when we get a bull market again, and you see crazy numbers in the market overall. And then you give yourself an extra added on little plus side of trading against those 100 shares that you own to make a passive income on a week to week basis if it doesn't hit that price, or if you have a lot of those shares. So that's why they kind of tell you it's good to have, you know, 10,000 shares of something or more, because it allows you to make a passive income. And the movement of the stock, it goes up or down, you get more gain out of it for the more that you own. So there's different ways to really make money in the market instead of just buying and selling. For those that are trading SPY, S&P 500, uh, it's been bullish. that support level. It broke below the support level, but the next following day it broke out. So we might see. It's interesting. So we might see it. Either it ejects. Oh yeah. It might reject again, or it might break out to go back up to that 429 level. That would be crazy. But I think it has to fight past this area right here. So I'm gonna draw. Excuse me. I'm gonna draw a box here. See how it operates. And see. Let's see how it operates in this range right here. These next couple of days, let's see how it operates. See if it holds. If it breaks above that previous high. If it does it, then we can see it come back below. Definitely. And then we'll just see. So yeah, keep an eye out for that. Going for SPY. Let me go and open up this real quick. For our futures. Honestly, I wouldn't. Only thing I would be trading if I was trading options this week would probably be SPY to see if we can reject on that 418 level. I would probably take AMD long and look for entries on that. Tesla, looking for possible shorts on Tesla, but we could possibly see it just go back up and retest that 179 level if it breaks out of that breakout level to 165. I will keep on an eye out for that for sure. AMD, AMD is just strong right now. It's kind of hard to really expect for it to go lower. It just looks too strong to really give up its overall push. But we could see a retest for buyers to be able to get another chance at the long. So yeah. Futures wise, like I mentioned, with SPY, I would be looking for rejections at this here. Not much. Oh, perfect. Okay. Um. Okay. So we would have to look. We have to hope. is for this to go. Looks like another leg up, so we might have to see a retest of that level. If so, overnight, we could possibly see it go up. And if it doesn't break out and hold, then we can see a rejection and see SPY come back down. I will look for an area of here, and then here. There was a gap fill already on that one. Just little areas of where I think support will be at. If SPY rejects, SPY rejects, SPY rejects, then we can see it come down in the coming days. So if it rejects this level, which is, possibility it could. I wouldn't really get my hopes up if it did. If it didn't, but just to keep an eye out for that. I would take a couple bites out of my food. Wait for NQ to load, which is QQQ. Perfect. Okay, so try and get this done as soon as possible for you guys. So we're honestly in an area where there we go. Perfect. So we're definitely in an area where we could see rejection happen. It's been touched up here previous times. So we can see us possibly rejecting. Okay. Now, it held briefly, opened up, closed, in this range. Now, in my mind, I'm thinking to myself, I would rather take this short and see if we can get back down to levels of here. Around here. Just because it's touched here so many times. And I will look at this as a support level. Yeah, it could probably bounce up here again, which it has, but we can probably look at it as like a first take profit zone, or probably use it as a take profit zone. And overall, use this as we can box this in. Let's go to we can use this as an area to keep an eye out for. Okay, boom. And then we can all right, okay, yeah, type for crap. Write that down there, boom. So what I will be looking for is I'll be looking to see if NQ rejects the breakout and then comes back down into here. And then, from here to here, it's not a nice profit for sure. If we break out above, then that kind of we probably see some crazy numbers to be fair. But if we don't, if we see some rejection in the market, we see some downside in the market, one second. Okay, my bad. Huh. All right. But so I will look out for that for sure. And then if we see more downside, then we know that there's a lot of support levels. To an extent, there's some support levels down here, but it could free fall. It could definitely reject this level, and we could see some downside. If it breaks out, then shoot, time to turn up. Because let's see if there's anything to our left to keep an eye out for. No, not too much. Honestly, not too much. But imagine playing that long though. Damn, money was being made for that whole day. From the 27th to the 28th. If you went long on NQ, you probably would be rich right now. So keep an eye out for that. There could be some rejection at these levels. And we could probably see it fall down. But it did bounce every time it fell below. So it could fall for sure. Support and then fall. But let's use our fib real quick. I forget. Is it F8? It might be F8. If it was. Okay. Let's go here to here real quick. Probably. No, one. So in my eyes, if we short at this top, we can take it all the way down to here and then to here it's saying. I want to adjust you. Maybe you're right here. Level. Yeah, close. Okay. So if we take it from here, here, this area, and then down here, which it really didn't hit too much of that zone. It did, not a whole lot. We could probably short for sure. We could short this for sure, and then take it probably around this area. This zone, and this zone. So I'll probably, if I was trading 4 contracts, I'm gonna take my TP here, 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 and somewhere down here, just to see if I can get a runner to make some money. That would be my idea. So if I was going with 4 contracts, I would sell that market.
Order submitted.
And then go down there like that. But market's not open for another couple hours. So, but that would be my idea of what I would short. Crude oil. I haven't traded you probably in. I haven't really traded crude oil lately. I like crude oil a lot. Well, of course, it's not going to be able to trade. The market's not open. Let's see if crude oil opens up. See if this chart opens up for us. It'll take a moment. Okay. So crude oil. Up a higher time frame. Ooh, gap was filled. Nice. That gap was definitely filled. 100%. 100%. This gap was absolutely filled. Let me see. Is it? Okay, keep doing it wrong. This. Oh, well, that's just a range. Usually in ranges like this, we see. Okay. So now we're in this range where we can see that it broke out above it, came down, trade. So now we might just see some consolidation in this zone. So I'm thinking what we could possibly see is it come down and then come back up. So short term, we could take this until we get a bounce off of this level, then break out above. So maybe like we could take a long at this 75 60s level and then take it to have our take profits at previous high of 76, 78, 77 bucks, almost $78, and then 79, and then see where it goes around there. But that'll be nice. That's what I'll be looking at this week. Pretty much just NQ short, crude oil long, Tesla possibly breaking out above that level that I had mentioned at the 160 something range. You could take AMD long, and then SPY will be probably a breakout or a rejection at that level. Other than that, probably going to chill and relax a little bit. I appreciate everybody that tuned in. It was what, almost 2 hours of this, but hopefully it helped. Again, I'm just another dude on the internet just trying to show what they see, and hopefully it helps. If it doesn't, okay, make sure you guys like, subscribe on YouTube. Those that are on Kick on Twitch, hit the follow button if y'all new. I might game a little bit later today, so keep an eye out for that. Other than that, peace out, stay black, make good choices. Let's keep on growing, believing in yourself, sustain some confidence in your trading, in your rules, believe in your rules, and shoot, write down your trades. I'm still trying to better myself with writing my trades down, my setups. Sit on my hands if I don't see something that goes in my way. Don't overtrade. Make sure in your rules that you set how many trades you're willing to take a day, and don't overdo it, because that's where you lose money. Other than that, I'll catch up with you guys. Hopefully you guys have a great week.